Everybody thinks it's gold rising, but actually it's fiat currencies declining. And I'm trying to ram that message home because the people who will protect themselves from the multiple crises that are now in view, they're the people who actually understand that it's the paper currencies going down, not gold rising. And it's really for that reason that, when people ask me, what's your target for gold or silver, I don't give one. I mean, as a long-standing stockbroker, I know that every forecast you make is just something that you pluck out of thin air. No point in doing it. Silly game. So I don't do that. But also, the question should be phrased, how far do you see the dollar going down or euro going down or whatever your favorite currency is? And the answer to that, I'm afraid, is I think they're all on their way to zero. The question is, how long will it take to get there? That depends, I think, on how events unfold. I mean, we've got a potential war in the Ukraine and also in the Middle East, which could end up with being nuclear. Obviously, it's goodbye everybody if we go down that route. But there is also the fact that the US dollar is in a debt trap, and there seems to be absolutely no recognition in the political class of the importance of that position, and they're still spending like Billio. The excuse is, and it's an election year, and we've got to get re-elected. And on top of that, I mean, we've drifted into socialism in Europe with France and now the UK. That's going to bring on financial disasters for both the euro and also sterling. And you can see that the Bank of Japan is suppressing interest rates at the zero bound. They're still zero. They're determined not to raise them. At some stage, they're going to have to do it. But I think the biggest problem, which everybody is getting wrong, and I mean virtually everybody, is the outlook on interest rates. They think that interest rates are going to fall. They're not. I mean, they might come down a touch because central banks actually don't understand the role of interest rates, and also they're under huge pressure from markets to reduce interest rates. Also, they're under pressure to, if you like, alleviate the problems in the banking system, which undoubtedly are exacerbated by current interest rates. I mean, look at the commercial real estate situation in America, for example. You've got zombie companies who cannot afford interest rates at this level, and they're gradually having to refinance themselves from the lower rates to which they became used. These are all disasters coming up, and I don't know which one's going to hit the fan first. I mean, nobody does, but it's all there. It is all there, and that will give you your timing.
Alasdair Macleod often emphasizes not gold rising, but fiat currency declining. He stresses that those who understand this concept will better protect themselves from the crises ahead. He avoids giving targets for gold or silver, noting that such forecasts are speculative and not worthwhile. Macleod suggests asking how far fiat currencies like the dollar or euro will fall. He believes they are all on their way to zero, though the timing depends on unfolding events, such as potential conflicts in Ukraine and the Middle East, which could have catastrophic consequences. Additionally, the US dollar is in a debt trap with no political recognition of its seriousness, leading to continued excessive spending. In Europe, drift towards socialism in countries like France and the UK could spell financial disaster for the euro and sterling. Japan's suppression of interest rates will eventually backfire, and the widespread misunderstanding of interest rate trends adds to the problem. Central banks are pressured to reduce rates despite the adverse effects on the banking system, as seen in America's commercial real estate struggles. The transition from lower rates has created zombie companies unable to cope with higher interest rates, indicating looming financial turmoil. Macleod asserts that while the exact timing of these events is uncertain, the issues are imminent.
People's Bank of China has been buying gold, but actually it hasn't been buying gold, it's been selling dollars. It's been reducing its dollar commitment. Now, as to whether it's frightened about the future value of the dollar, or whether it is merely in line with the Communist Party's meme of reducing the involvement of the dollar. You can pick either of those reasons. When we look at the other central banks, predominantly in Asia, who have been accumulating gold, again, I think there are these twin reasons. They can see that the geopolitics is actually working against the dollar. So the dollar's value is likely to decline on that basis alone over time. Furthermore, they can see, they will know, they have the inside track. They have these sort of quiet meetings to which we are not privy amongst the monetary panjandrums, if you like, in the Asian central banks, knowing that they're moving towards a gold standard. It's probably some way off, but obviously you need to accumulate some gold. Now, India is very interesting in this because India has denied gold. India has been Keynesian in its approach to economic management. And I think that also includes, sort of a sort of semi-official view that gold is a pet rock. But that has now changed. The government is now accumulating gold. Why? Because they're a member of the Shanghai Cooperation Organization. They're privy to the conversations, and they know that that's the direction in which it's going. They don't want to be first going there, but they know that they would be complete idiots not to accumulate some gold, even if they hope the problem will go away. So that, I think, is what's happening at the central bank level. Now, at the market level, we have seen for well over a decade now that the Chinese in particular have been stripping gold out of Western vaults, out of Western mines, whatever. They have been accumulating gold. I have a copy of, in English, of the original articles appointing the People's Bank of China to act for the Chinese nation in the accumulation of gold and silver, and that was dated in 1983. Now, since then, there's been massive investment inflows, and in through the 80s, and in the 90s, massive growing. And through into the 2000s as well and beyond, growing export surpluses. Now, all the foreign exchange transactions are handled by the same organization, the People's Bank of China. So all those flows go across their desk. Now, if you're old enough to remember how central banks, how conservative individuals, non-speculating individuals, those who wanted to protect their wealth for the long term, how they looked at gold, and this would include the Chinese, they reckoned that you should have somewhere between 10 and 15% of your money in gold, and the rest is credit for you to do whatever, buy houses, buy expensive yachts or whatever. That's the Arab approach. If you just take that 10% and you look at the cross-border flows, firstly the big capital inflows in the 80s, and then the growing surpluses with continuing inflows, the amount of stuff crossing the PBOC's desk, you take 10% of that at contemporary prices. And remember, this was a bear market that took the gold price down to $250 in 2002. I reckon that was over 20,000 tons. That's a substantial amount of gold. The largest, in fact, of anywhere in the world.
Alasdair Macleod believes fiat currencies are heading towards zero due to excessive money printing and national debts. As these currencies lose value, gold and silver, with their limited supply, become more valuable as safe havens. In times of economic trouble, like the 1970s and after the 2008 financial crisis, gold prices soared as people sought safety. Central banks, especially in Asia, are buying gold to protect against a declining dollar and future uncertainties. Some even speculate about a return to a gold standard, where currencies are backed by gold, providing stability. Geopolitical tensions, like conflicts in Ukraine and the Middle East, can drive demand for safe haven assets like gold and silver. Macleod argues that high interest rates are necessary to stabilize markets, which can benefit gold and silver. China and India significantly influence the gold market through their strategic buying. As fiat currencies gibber, the importance of gold and silver becomes more evident. Central gibber are accumulating gold, highlighting the need for safe haven assets. By investing in physical assets, ETFs, mining stocks, and diversifying, investors can better navigate uncertain financial times.